What we have here, folks, is a breakout with confirmation. Now we're consolidating. This, again, favors a move up eventually to test this. If by chance, instead, price breaks back below, let's just say it goes like this and then it goes like this, that gold is going to not only come down to this level, but come down to the level I thought it would come down to, and maybe it still will, around the 3,500 to 3,600 level. My guess is silver has a little bit more upside on this CFD's chart. It looks like just above $60, and then you'd expect a pullback. Now, listen, it's still in an uptrend, so don't be scared of pullbacks.
Watch out for a winding up structure that will likely create some form of continuation that'll see you make the 60. When the 60 is run, does that mean that's the end? He's calling a top? Not at all, not at all. So whilst you will have a pause and a pullback and a churn for some degree, you will get on your bike and go again. 333 up top there, a pause at the 90s on the way of the journey. We've done this countless times with flags to 600. We've said 4 digits and single digit gold silver ratio to the downside.
Gold and silver are experiencing a historic breakout in 2025, surging to new all-time highs as central banks accelerate their gold accumulation. Silver, in particular, has nearly doubled this year, driven by a tight supply and booming industrial demand from sectors like solar and electric vehicles. This powerful price action is viewed by many as a hedge against rising geopolitical risks and expected interest rate cuts, signaling a major structural shift in global markets. Joining us now is Francis Hunt, the founder of the Market Sniper and originator of the Hunt Volatility Funnel, HVF trading methodology. Francis is analyzing silver's current upside structure, which he finds very similar to gold. Using his HVF method, he explains the current price pause near the $57 mark, confirming the structure's interim target before confirming a likely near-term target of $60. Let's watch clips from Francis Hunt's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
You did also have an upside structure in silver as well. We'll show you that and how well it's doing and why you will see a 6 in the not too distant future. Very similar structure, not far off to the gold's one, and offering us $60. Oh, and we're pausing now. And why we're pausing now? Well, because that magical thing called HVF method that you can learn about and watch implemented in the markets, and that will give you greater comfort about your trading, has told you that running the $57 mark and just through it has actually seen you make the second interim. We had made the first was very early and very small. We melted up very quickly to the second. You know how we tell you once you leave the one, you run quickly over the open territory. Watch out for a winding up structure that will likely create some form of continuation that'll see you make the 60. When the 60 is run, does that mean that's the end? He's calling a top? Not at all, not at all. Refer back to the gold Swiss. That's a bigger time frame. We're on a 6 hour. The gold Swiss was indicating you've got quite some big way to go. Gold climbing higher means silver will be going higher too. So whilst you will have a pause and a pullback and a churn for some degree, you will get on your bike and go again. What about that gold silver ratio? What about that gold silver ratio? XAU, XAG. This fella is breaking out key levels that we have warned you are the big ones that you need to watch out for to the downside, meaning that silver pricing is going to be really benefiting from some price discovery. Let's go down to the daily. We had a beautiful inverted HVF in that, by the way, which was pointing to further downside. I want to go still higher though. I'm going to take you to the weekly on the gold silver and clean up a little bit, or maybe open this up for you so that you can see it. Turn the eye back on and you can see the point of control. That was through the middle of it all. We've spoken of the pink box that sits around here. You had a little probe to the upside and a little probe to the downside there. The point of control runs typically through the middle. And we've said when you break this key level, and we were discussing 75 as a real key level, the 75 to the 95, you can see that's roughly 95. That is roughly 75. You were stuck in a range that you entered sometime back in 2022. You've been 3 years in essence, but for a short pop out the top there and minor wick dips there and there, all were rejected. All were rejected, both on the high side and the low side. This was quite a potential breakout move that was stymied. Our point of control was at 84.5. You can see that we've drawn it. There's a blue line right through it. And you can see the volume by price is also showing that you spent the bulk of your time through there. That's your locust burger brought to you by the World Economic Forum. Patty in the middle of your bun there. And you are now breaking to the downside in a dramatic sense. You had a lovely little wind up. This all occurred on the amazing little glitch in COMEX and everything that went on by the cartel of criminals to cover up their footsteps for the manipulation they have been perpetuating against silver, that saw silver miners be greatly devalued in a market where their product couldn't be upside correctly priced, in an environment where the benchmark was $1 that has been debased at an ever escalating rate. That's what you've been. And now suddenly we will find price discovery. Going forward, you don't know what HVF method means. Fast moving breakouts on real tight risk and macro. And you were a trigger at the 29.96 levels. You messed around a bit. People think it was so long coming. You are now at 58. You are virtually 58. That was your triggering event at 29. It had a 2 in it. You're about to run a 6. You've already done well if you were watching. This triggered early. All the cup and handle guys only thought it broke at $50. No, no, and no. It broke sooner. That's what they don't realize. It broke a lot sooner. It broke down here on the takeout here. And First Majestic is offering you 145. You can buy it at 15. I'm busy setting you up for a 10x. That's not using options. That's not using anything fancy, just on an investment hold. That is right. 333 up top there, a pause at the 90s on the way of the journey. We've done this countless times with flags to 600. We've said 4 digits and single digit gold silver ratio to the downside. Single digit gold silver ratio to the downside. Think about that, my friends. Think about it indeed, indeed. What about gold in terms of the S&P? Shouldn't you be in stocks? Buy stocks, they say. Well, we have the following to say to you in terms of that. We divide it by the SPY, which is the Spider SP500, and we're going to show you what's happening there. 666, the devil's number. Whoop, whoop. Yep, this is how it works. This is how it rolls since the SPY's been around in 1993. Generally, gold's been a poor investment. Look at the SPY beating gold during this period. The only time you actually had outperformance was the 2000 lows to the 2011 high. That was peak gold beating up on the SPY. You had downside on the indices and outperformance by gold during that period. You are now setting up absolutely one of the best reversal patterns one could hope for. Multi-shouldering, final heads. And here you go again, boom, boom, bosh, down a shoulder. You're going to come up. You're going to do one more, and then you will go, 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 and go. You're currently at 6. That is gold divided by the S&P is 6. Gold going up and the S&P slowing or going down. This is a trade you can put on like our long gold short oil.
In this must-watch chart breakdown, verified investing chief market strategist Gareth Soloway explains why gold's confirmed wedge breakout remains solidly bullish with protective support intact, favoring a retest of all-time highs, while silver still has room to run towards $62 to $65 before its next healthy pullback. Gareth stresses that consolidation is normal and healthy in major uptrends, reminding traders to respect key levels and let the charts, not emotions, dictate the next move. Now let's watch some clips from his interview.
Can gold go up and make a new all-time high? Charts are looking slightly more bullish than they did a week ago here. All right, we're going to deep dive into this chart plus silver, folks. Silver has made a new all-time high. It hasn't reached the high end of a parallel I'm going to show you exactly where I think silver is going before it has its next pullback. Let's take a look. All right, into the chart of gold we go. So what we had here was this parallel, right? Or I should say this wedge pattern. So you can see this down or descending trend line here, which connected from the all-time high on gold to the secondary pivot high. And we can see right here, we broke above and then we confirmed the breakout. Now on the lower end here, we have this starter point. It connects right through here and all of these subsequent pivot points along the way. Now, what this told us here is that this essentially was a trend line of support. This was a trend line of resistance. When you have a wedge pattern, as always, folks, remember, it's squeezing price between the two until it either breaks out or it breaks down. In the case of this setup, it very clearly broke out, right? And more importantly, it confirmed. Why did it confirm? Because here's your initial breakout candle. The next day, the close of this candle here was above the high from the previous day. That confirms the breakout. Now, since then, you've seen that gold hasn't really ripped up. That's okay, right? And again, the key here is it's okay because as long as you stay above this zone, this is just bullish consolidation. So what is a bull flag? A bull flag is a move up with sideways chop like that, slightly down even. And that's really what we have here. We have this move up, it broke out, and now we're doing this. And again, as long as price stays above this zone, this is the protective support zone on gold. Okay, now listen, just because gold broke out of this wedge pattern doesn't mean it's going to new all-time highs. It does favor a test of the double top all-time high up here. But again, we don't know if it will get through that at this point. And I think that's really important to understand is that a good technician of the charts is always saying, okay, here's my resistance level, and we have to respect it until it's broken and confirmed, right? Now, it can mean it goes up to that level, but retail or emotional investors will assume it's going to break. A good chart technician understands resistance is resistance until proven otherwise and respects that level. All right. So what we have here, folks, is a breakout with confirmation. Now we're consolidating. This, again, favors a move up eventually to test this. Now, when I say favors, does everyone fully understand what I mean? I mean, probabilities favor that move. It doesn't mean it's 100%. I've seen the greatest bull pattern setups fail, and I've seen the greatest bear pattern setups fail. All right. So again, we always have to remember that the chart is always right. We are just trading in the chart's world. Okay. So again, what I mean by that is this is what's favored to happen. And then we have to see what happens once it gets to double top. If by chance, instead, price breaks back below, let's just say it goes like this and then it goes like this, right? And then it starts trading below this level and confirming below, then that changes the whole ball game as a technician, and you have to be very wary that gold is going to not only come down to this level, but come down to the level I thought it would come down to, and maybe it still will, around the 35 to 3,600 level. But right now, again, and remember, folks, whatever our personal feelings are, whatever we think, the chart is always right. And right now, the chart has broken out of the wedge, confirmed, and is staying above. Therefore, near term, the upside is the bias that is favorable. Okay. Very, very important to understand that, guys. Again, we all have our preconceived notions, but ultimately the charts are always right. And right now, the charts favor a move up. Always remember that the biggest moves come from failed moves, meaning that if you have a breakout and then it confirms and then that breakout fails and it breaks back down, its chances are it's going to be a big move down because, again, it got a lot of bulls on board and it has to wipe all those bulls out. And so, again, that's not what's favored to happen. But I always like to put that in perspective of just understanding that if you want to take a trade long on gold here, you need to keep a tight lid on any break below, and with confirmation, of course, the wedge pattern that is now support. All right, let's flip over to silver here. Silver has had an impressive move. Okay, now silver, again, folks, look at this beautiful parallel. All right, for me, this is the level I'm watching. You can see if we know that silver had major support in these ranges here, right, all along here, well, what does it mean? It hit here and had a big pullback. My guess is silver has a little bit more upside on this CFD's chart. It looks like just above $60, and then you'd expect a pullback. Now, listen, it's still in an uptrend, so don't be scared of pullbacks. Like, pullbacks are actually very, very healthy. Like, for instance, this was a great bull run. Then it had a pretty nasty washout, went up, came down, and then ripped higher again. So again, everyone wants to be paid out instantly and make $1 million overnight. That's not how the market works. The market ebbs and flows. Silver had that great move between August and October, and now then it had its kind of consolidation, its rest period, and now it's gotten its next momentum move because it energized itself by taking a break. Breaks are really, really healthy in the world of charts.
The final takeaway from Francis Hunt and Gareth Soloway is clear. Gold and silver are demonstrating a decisive structural shift. Gold is setting up one of the best reversal patterns for outperformance, hinting at a period where it could once again beat up on the SPY. As charts for both metals mirror one another with similar bullish formations, the analysts suggest that the next significant move up in the precious metals sector is imminent. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.